Hey everyone, and welcome back. The market's been pretty wild lately, right? With all the talk about new tariffs, we've seen some big drops, and it's easy to feel a bit panicked. I mean, when the market is crashing, it feels like the world is ending. And for a lot of people, it feels like that because they're heavily invested in the market and they see their portfolio just disappear before their very eyes. But instead of panicking, let's focus. Times like these can actually reveal some fantastic, high-quality investment opportunities, especially if you know where to look. See, when everyone else is running for the exits, that's when we gotta be looking for deals. And today, that's exactly what we're gonna do. Today, we're diving into dividend growth stocks, companies that not only pay dividends but have a history of increasing them. Why dividend stocks now? Well, some are seeing a flight to safety. Investors love their reliable income and often strong business models, especially when the market feels uncertain. So with that said, let's dive in. First up, American Express, AXP, a company that I'm sure you're all familiar with. American Express is a global financial services company that offers credit cards, travel-related services, and financial products to consumers and businesses around the world. Now, with all the talk about tariffs, there are definitely some concerns about consumer spending, which could impact AXP. When the economy slows down, people tend to cut back on their spending, and credit card companies are usually the first to feel the pinch. However, American Express is a classic, reliable dividend grower. They've been in business for over 170 years, and they've weathered a lot of storms along the way. In fact, they've increased their dividend for 29 consecutive years, which is a testament to their strong business model and their commitment to returning value to shareholders. And with the recent dip in the market, AXP's stock price has come down a bit, which could present a good entry point for long-term investors. Of course, you always want to do your own research before investing in any stock, but AXP is definitely one to keep an eye on. Next up, we've got Comfort Systems USA, FIEX. Comfort Systems USA is a leading provider of heating, ventilation, air conditioning, and mechanical services. They primarily serve the commercial and industrial sectors, which is interesting because some analysts believe that these sectors might actually benefit from certain policies that are designed to spur industrial activity. Now, I know what you're thinking, HVAC. That's not exactly the sexiest industry in the world, and you're right. But sometimes the best investments are in the companies that are quietly doing their thing and making money hand over fist. And that's exactly what Comfort Systems USA is doing. They've got a strong track record of profitability and dividend growth, and they're well positioned to benefit from the growing demand for HVAC services in the commercial and industrial sectors. Plus, their stock is down quite a bit from its recent highs, which makes it even more attractive from a valuation perspective. So if you're looking for a solid dividend growth stock in a boring but profitable industry, Comfort Systems USA is definitely worth a closer look. Third on our list today is TROW Price Group, a global asset management firm that offers a wide range of investment products and services to individuals and institutions. Now, asset managers like T. Rowe Price often get hit hard when the market falls, and this time is no different. See, when the market tanks, investors tend to pull their money out of stocks and other risky assets, which can hurt asset managers' bottom lines. However, I think the sell-off in TROW's stock price has been overdone. T. Rowe Price has a long history of strong performance and dividend growth. They've increased their dividend for 36 consecutive years, which is incredible. And with the recent market pullback, their dividend yield has become even more attractive. Of course, there are risks to consider. The growth in TROW's dividend has slowed a bit in recent years, but the current yield is still pretty juicy. So if you're looking for a high-quality asset manager with a long history of dividend growth, TROW price group might be worth your attention. Next up, let's talk about Broadcom, a major player in the semiconductor industry. Broadcom designs, develops, and supplies a broad range of semiconductor devices that are used in a wide variety of applications, including smartphones, data centers, and networking equipment. Now, there's no denying that the semiconductor sector has been facing some headwinds lately, particularly due to concerns about tariffs and slowing global growth, and as a result, Broadcom's stock price has taken a hit. However, I believe that the sell-off in AVGO is overdone. Broadcom has been a very strong dividend growth stock in recent years, and they've continued to increase their dividend even in the face of these challenges. Plus, they have a strong balance sheet and a history of generating strong free cash flow, which gives them a lot of flexibility to continue investing in their business and returning value to shareholders. So, if you're looking for a high-quality semiconductor company with a strong track record of dividend growth, Broadcom is definitely worth a closer look. And finally, let's talk about a company that's a little bit off the beaten path, Texas Pacific Land Corporation. Now, I know what you're thinking. Texas Pacific Land Corporation, what is that? Well, TPL is a unique company that owns and manages a massive portfolio of land and mineral rights in West Texas, primarily in the Permian Basin, which is one of the most prolific oil-producing regions in the world. Now, TPL is not your typical dividend growth stock. They've only been paying a dividend for a few years, and their dividend history is relatively short. However, they've recently started focusing on dividend growth, and they've increased their dividend significantly in the past couple of years. Plus, they have a very unique business model with incredibly high margins and a lot of potential for growth. See, as oil and gas production continues to increase in the Permian Basin, TPL is perfectly positioned to benefit. So, if you're looking for a truly unique dividend growth stock with a lot of upside potential, Texas Pacific Land Corporation is definitely worth adding to your watch list. So, there you have it. 5 dividend growth stocks feeling the heat from the recent market volatility, but potentially offering good value. Remember, always do your own research before investing. Look, I know it's easy to get caught up in the hype and the fear when the market is going crazy, but it's important to remember that the market is not the economy, and the economy is not the market. The market is just a bunch of numbers on a screen. It's driven by emotion in the short run, but by fundamentals in the long run. So don't panic, stay focused, and keep looking for those high-quality investment opportunities. If you found this helpful, give this video a like and definitely subscribe for more stock analysis.